Is the gift tax yet another tax you must pay? Maybe not. Hi there. My name is Kenner French. I'm with Vast Solutions Group, your tax and financial engineering firm for entrepreneurs. We've been in business for over 50 years and have quite a bit of knowledge in estate planning for entrepreneurs, so we're going to add some value on this video. Now, imagine, how about this? I'd like you to meet my friend, quote, Mark. He's a retired real estate investor who, after a long and great career, is enjoying his retirement. Some of what he's enjoying about his retirement is sharing part of his accumulated wealth with his family, specifically his wife and 2 sons. Like many Americans, Mark likes to be sure that when he's sharing that wealth, he isn't giving too much to the IRS. Mark knows about the gift tax and knows how to make those gifts without running headlong into a taxable situation. This is Mark's responsibility because the IRS puts the onus on the giver. If the gift is a taxable event, he doesn't pay up. It's the responsibility of the beneficiaries after he passes in the form of an estate tax. These rules are in place so that he can't simply, give his entire fortune to his sons before he dies. Now, exemptions for family and friends, let's talk about that. It would be different for his wife, Jean. The unlimited marital deduction means that gifts that Mark gives to Jean, or vice versa, never incur the gift tax. There's one exception. Maybe Jean is a non-U.S. citizen. If so, there's a limit to what Mark can offer her, up to $155,000 per year. This is the limit for 2019. It's pegged to inflation, as a matter of fact. The gift limit for other people is $15,000 and it applies to both cash and non-cash gifts. So if Mark buys his older son, let's say Tony, a $15,000 motorcycle, it's the same as writing a $15,000 check to his younger son, Jerry, or gifting $15,000 in stock. Spouses have their own separate gift limit. His wife could also give Jerry $15,000 from the account that she shares with him. Education and healthcare. The gift tax does not apply to funds for education or healthcare. So if Tony breaks his leg riding that motorcycle, he can write the check to the hospital. Now, if Jerry goes back to college to become a doctor or what have you, Hugh or Mark can write a tuition check for the college. That only works if Mark is writing the check to the institution directly. If he's writing the check to the beneficiaries, i.e. Tony and Jerry, he might incur the gift tax. Now, the lifetime gift exemption. What if Mark were to go over the limit? The lifetime gift tax exemption would go into effect, and the rest would be reported as part of the lifetime exemption via Form 709 that comes in April. Unlike the annual exemption, the lifetime exemption is cumulative for Mark. Currently, the lifetime exemption is $11.4 million. Being a former investor and an active extreme sportsman, Mark is concerned about his estate strategy, were he to borrow Tony's motorcycle and attempt to jump the Snake River. What would happen if he didn't make it across? If that unfortunate event occurred, he would have to give $9 million over his lifetime, and his estate and all of that giving totaled more than $2.4 million. The estate may owe a federal tax and possibly an estate tax. Barbara would have her own $11.4 million lifetime exemption, however, and since she is the spouse, estate taxes may not apply. Any wise investor will tell you, leave this to the experts. Talk to a trusted financial professional about your own plans for giving. If you have any questions, we're here to help. Check us out on the web at www.vastsolutionsgroup.com or give us a call. Hopefully, you're going to see as much value as a number of our clients have seen. Our number, 888-808-VAST or 8278. Once again, my name is Kenner French, and it's indeed been an honor. And if you've gotten value out of this, please pass this video on to a friend. I bet you they will derive as much value as you have.